Welcome to Pulse 24. 600 billion in infrastructure spend, power grids are buckling, and the efficiency dividend is finally due.
Great to be here, Nate. Let us get into the numbers.
Big tech just reset the cost of doing business, or at least the cost of building the future.
They certainly did. In the week ending 8th of February, major players committed a combined $660 billion to AI infrastructure, according to the Financial Times.
That is a staggering figure. Is it just the usual cloud providers padding their budgets?
It is mostly Amazon and Google. Amazon pledged $200 billion through 2026, a 33% jump, and Google is doubling its spend to $185 billion.
Is this panic buying to secure GPUs or a calculated defensive moat?
It looks like a calculated flaw. They are establishing a level of capital intensity that smaller competitors simply cannot match without sovereign backing.
Speaking of sovereign backing, the startup market does not seem to be starving for cash either.
Far from it. Anthropic closed a $20 billion round this week at a $350 billion valuation.
That valuation held steady from January talks, so the appetite is there, but are public investors as optimistic?
Not entirely. We saw divergence in the Magnificent Seven stocks on 7th of February. The market is starting to punish companies that only promise spend without showing clear returns.
So for the mid-market leader, does this massive spend mean cheaper compute is coming?
Expect capacity to loosen, but do not bank on price drops yet.
What is the move for a CFO looking at these numbers today?
Treat this as a signal that the infrastructure layer is safe, but verify your own return models before you try to match their velocity.
Moving to the return on that capital, buyers are starting to demand their share of the savings.
It is the pivot point we have been waiting for. On the 6th February, the FT reported that KPMG is demanding fee reductions from external auditors, explicitly citing AI efficiencies.
That is aggressive, asking for the discount before the tool is even fully proven in the audit workflow.
It coincides with Anthropic hitting $1 billion in annualized revenue, surpassing many coding incumbents just 2 years after launch.
So the tools are selling, and the clients want the margin immediately.
Exactly. We also saw S&P Global and Intuit stock take a hit on 3rd February as investors fear vertical AI agents will eat their premium pricing.
Is this linked to the new agent capabilities we saw released?
Yes, Anthropic launched Claude Opus 4.6 on 5th of February with a 1 million token context window, specifically targeting these vertical workflows like legal and finance.
If I am selling professional services, how do I defend my fees against this pressure?
Stop billing for time and start billing for outcomes immediately, because the billable hour is shrinking.
And if I am the one buying services?
Draft a clause today requiring vendors to pass through AI-driven productivity gains at your next renewal.
We have the capital and the contracts, but the physical grid is flashing red.
It is getting serious. Bloomberg reported on 3rd of February that ERCOT in Texas is reconsidering previously approved grid connections for data centers.
Wait, reconsidering approvals that were already signed and sealed?
Yes, that is the critical shift. Having a permit is no longer a guarantee of power if the grid stability is at risk.
That changes the risk profile for anyone building their own facilities.
It means the constraint is no longer just money, it is physics.
We also saw trade restrictions tighten this week, adding another bottleneck.
The US State Department ramped up scrutiny on NVIDIA exports to China on the 4th of February, effectively closing the loop on enforcement.
So we have a power squeeze domestically and a chip squeeze internationally.
It forces a multi-vendor strategy. You cannot rely on a single jurisdiction or a single chip architecture for your compute supply anymore.
Is there any relief coming from competitors like Intel?
Intel formed a dedicated GPU production team on 3rd February to challenge NVIDIA, but that is a 12 to 24-month play.
What is the immediate fix for an operations lead facing these delays?
Audit your utility agreements for force majeure clauses regarding grid stability, and do not assume approved means powered.
Lightning round, 2 quick ones to watch.
Positron raised $230 million on 4th February to build NVIDIA alternatives, backed by the Qatar Investment Authority.
Is that a signal to switch chip architectures yet?
Not yet, but track their benchmarks if you have heavy inference workloads planned for 2027.
And a legal update from the big labs.
OpenAI accused xAI of destroying evidence in their court fight on 2nd February.
Just a spat or a real governance risk?
It highlights the liability of moving fast. Ensure your own data retention policies are litigation-proof.
Stay curious, stay informed. See you next time.